My business is called Strategic Metals Invest. And when we say strategic, what we mean is those metals that are critical to all nations' economic prosperity and probably increasingly military capabilities. The average gains for the last, say, 5 years, even probably 8 years, is about 34% a year. 2020 was all about energy transition. We're going to go electric. It's going to be electric cars, it's going to be wind, solar. We've barely just begun that. The infrastructure is not in place, but that will continue, right? Since then, now we have AI and automation, robotics. That's a huge driver.
Hey there, and welcome to another episode of the Jack Bosch Show, where we talk about all things real estate, entrepreneurship, and finance. And today we're going to go into a hybrid kind of asset class that it's like kind of finance, kind of not. The subject is strategic metals. And with our guest, Louis O'Connor, and Louis is coming to us from Ireland. So Louis, how are you doing today?
I'm very well, thank you, Jack. I'm happy to be here.
I'm happy to have you here. So the very first question is, what are strategic metals? I know there's precious metals and there's rare earths and things like that, but what is strategic methods and what do you guys do with those?
Okay, good question to start anyway. So, it's funny you ask it. I mean, I know your audience is in North America, and I think probably President Trump has mentioned critical raw materials nearly every day for the last year, and they're talking about Ukraine and Greenland and abandoned mines in the US. And those are the metals we'll be talking about today. My business is called Strategic Metals Invest. And when we say strategic, what we mean is those metals that are critical to all nations' economic prosperity and probably increasingly military capabilities. So I'll just tell you very quickly who we are. So when I say we, there's three facets to our business. I'll be talking today about the offer we have, or the invitation we have to private investors. But what we will talk a little bit about, but which is probably more important, is our core business. So you said, I'm in Ireland at the moment, but our main office is in Frankfurt in Germany. We have 45, 50 people in the office there. We also have a storage facility. It's the largest sort of logistics and distribution platform for strategic metals anywhere outside of China. And our core business there in Germany is we're buying these metals directly from producers, and then we resell them to manufacturers and industry buyers. So we've more than 4,000 clients in 74 different countries around the world, and we're a tier one supplier to companies like Samsung, Siemens, BMW. So we're very well recognized globally as an industry supplier. And the reason I mention that, first of all, Jack, is if we weren't embedded in this industry, we would have no business offering strategic metals to private investors because, these metals might end up in the engine of an F-35 fighter jet or a nuclear submarine or technology. So it's a very sort of a complicated and challenging industry to be in. And, ordinarily private investors don't get a chance. But we have this sort of forward-looking business model where we offer industry metals, professional storage, and liquidation as well. But I'll get into more detail as we talk about exactly what those metals are.
Well, that's a cool business to be in. But you do also have a private client business part of that. That's, I think, where I and my audience are particularly interested in. Now, how does that work? And again, let's dive into also what are these metals? I mean, if it's strategic metals, now is gold, silver part of that, or are we talking about kryptonite? I'm just kidding, of course. But
yeah, well, they'll sound like kryptonite in a minute. You'll hear, because there'll be words we haven't heard there before, and they're hard to pronounce, like dysprosium and praseodymium and terbium and gallium and germanium. But so yeah, that's why I'm here, is to talk about the offer to private investors. So to give you some context, so just as an example, just last week, the US Geological Survey in North America published its annual critical minerals list. There's 45 metals on that list. Now, we offer 45 of those metals to industry clients. Some of them are base metals, so they're not all that rare, if you will. The strategic metals we'll be talking about today, when I say strategic metals, I mean in the context of that they're strategic to private investors. And so they're like a little subdivision of the wider list that the EU and North America would need. And what are the characteristics, if you will, that get them on the list? What makes them different from base metals like copper, lithium, cobalt, is that they don't occur naturally in the Earth's crust. They're always a byproduct of the mining of another raw material. So one of the metals, gallium, for example, has over 3,000 applications, but there isn't a single mine, a significant mine that exists for gallium anywhere in the world, because gallium is always a byproduct of aluminum mining. Hafnium, which is in rods for nuclear reactors, is a byproduct of zirconium. So they don't occur naturally, which means there are sort of production recovery constraints determined by the fact that they're a byproduct or maybe a byproduct of a byproduct. So they're not really found in abundance in the Earth's crust.
Interesting. But so these are metals that are highly in demand for certain critical functions of this world. What are some of the critical functions where these things are being, or industries where these things are being used for?
Well, everything and anything nowadays, Jack. I mean, these screens we're using right now have indium. Well, they have multiple. These devices we're using would. One smartphone has 12 or 13 technology metals is another word for them as well. There's about 12 or 13 semiconductors in one smartphone. So all modern technology, energy transition, so electric cars, wind, solar, aviation, space exploration is becoming a fully fledged space industry. AI runs on data but relies on technology metals and rare earths for the cooling systems and the magnets. It'd probably be easy, we live in the technology age. Everything from a microwave to a spaceship have semiconductors and computer chips. So just about everything.
So let's talk about that. So you mentioned a key word that has been flowing around everywhere all the time: rare earths. Now, is this somewhat the same as rare earth? Is this something completely different? Are they related with each other? How does it relate to rare earth, and why are there and is there a scarcity of these overall, or how does the world how's that world look like? Because for a private individual, as I gather and to understand, we'll talk about that more. You offer private individuals the opportunity to actually buy them, hold them, and I assume that is for monetary purposes of like that eventually they're worth more or something like that. That only works if there's like a real scarcity on there, or if they're really strategically so important that it becomes a safe place to put money? But again, there's a lot of questions in one right now. Let's start with like rare earths versus strategic metals. What's even the difference? Excuse my ignorance there. And then why would somebody want to hold on to these kind of things in the first place?
Okay, so a good bit to unpack there, but no, you're right. We are talking about rare earths. Strategic metals is really just an umbrella term. It's not a scientific term or even an academic term. Strategic just means all metals that are critical to economic prosperity and defense capabilities. But in that sort of division, rare earths play a part. So the easiest way to describe them would be to call them either rare earths or technology metals. That'd be the exact correct term. So we are talking, as you know, a lot of people are talking about rare earths, and that is indeed what we're talking about today. So exactly, we have a winning, in fact, investment strategy. None of our private investors have lost money if they've been aligned with the strategy. That is to buy these metals, hold them for a minimum of 3 to 5 years, and you'll make money. And where is the scarcity coming from? Well, first of all, China produces or processes over 90% of the world's rare earths. Both Europe and the US, we pretty much sort of, I suppose, outsourced our capabilities to China over the last 20 or 30 years for this. And that's why, they're making the news a lot at the moment. President Trump and Europe are all talking about them. The funny thing is, despite the name, Jack, they're not always that rare. There's about 500,000 abandoned coal mines in the US that have rare earths in what we call the mine tailings. They're in there's discoveries in Sweden. They're even in Germany, but because they don't occur in abundance or in high concentrations, it's not always economically viable to go and get them. And that's sort of how we allowed China to, we exported all the technology as well, if you will, to China. So just to give you some further context, so because they don't occur naturally, they have to be extracted, then they have to be separated and remetallized to very high purity levels. And China is about a generation and $1 trillion investment ahead of the rest of the world. In fact, all these
Wow.
this escalation between the US and China over the last, since April the 4th, has all been about rare earths. China has started some export restrictions. Companies like Ford Motor Company are saying their production will shut down in a few months if they don't have these raw materials. So yeah, that's the play. You have a very heavily localized supply that can be manipulated, and you have surging demand, high demand and increasing demand, and there's your potential for profit.
Interesting. Yeah, the other day, I just actually yesterday, I heard something that somebody claimed like the the next war is already decided in a way because and I don't know if I agree with that or not, but I would like to have like your stance since you the rare earths play a lot of role in there and these kind of things play a lot of role in there. That basically I said like even our military power of the United States, if you go look, the supplier of the supplier of the supplier of the individual materials is all China. So in other words, China could technically close the door tomorrow, and within a few months after the whatever is in the warehouses runs out, the American military couldn't repair their ships anymore, repair their tanks anymore, repair their missiles anymore, because eventually, at the third, fourth level of supplier, it's all produced in China in the first place. And a lot of these rare earths and things like that come from over there. So if they shut it down, it has a tremendous impact and on the ability of the United States to defend themselves. You think that is true, number one, and number two, you think this is, and we don't need to want to go into politics, but you think that is the reason why all this repatriation of industry is one of the big goals of the Trump administration right now?
Well, yeah, whoever said that is 100% correct. You could, in fact, you could already say we're in a sort of a Cold War 2.0, except it's not an arms race, it's a semiconductor race. Any future wars will be about precision, will be about computer chips, will be about technology. If you look World War One, it was steel, wasn't it, for tanks? Cold War was nuclear power. Now it's technology. The best technology will win the wars. And what happened was, Jack, we went through a period, I suppose, in the last few decades of globalization. And we're now going into a period of what you might call deglobalization. And what's driving that is resource nationalism. North America and Europe as well have woken up to the fact that it wasn't a good idea to allow one country to own and control 90% of the world's supply for raw materials that are needed for defense capabilities. That's an absolute fact. And that's the reality. I mean, that's the negotiations that are going on right now. Basically, what happened in 2018, the first Trump administration, along with Europe and South Korea, they were sort of banning or not allowing the most advanced computer chips to get to China. So they would sell some chips, but not the most advanced ones. Yeah. In retaliation, China said, okay, well, if we can't get the technology, we won't send you the raw materials. And on April the 4th, China introduced a ban on 7 of these rare earths. And one, prices have obviously gone up, but two, you've production of some car. You're right. There's not a lot of stockpiling there. So this is why they're a very good investment. I mean, any of our investors.
That's where the next curve of the argument then goes. So if this is the case, and this is escalating right now, and this is escalating perhaps because of Taiwan, which China has clearly stated they want to take back, and it's a big semiconductor country, and and this tension is not going to go away anytime soon, then as China puts a stranglehold on these resources, that means that any resources that of the same resources, if you can get a hold of some of them, prices definitely would go up on those. So as an investment opportunity, that's a very logical or not even contrarian thinking process to basically say like, well, if 90% is over there, they're shutting down supply to the world, and this is not going to go away, but yet I can own some, and the rest of the world all needs it until the rest of the world has built the capacities of actually getting to that stuff again, which you said they're $1 trillion behind and a generation behind. Prices might go up significantly of these kind of metals, which then makes it a very good investment opportunity. So I do agree with that. So that's and so what kind of, I mean, not obviously past results not reflecting what the future will bring, but what kind of results are people are these have investors gotten when they bought these kind of metals?
Okay, so the average sort of gains, like we recommend people diversify, obviously, and they're invested in multiple types of industries. The average gains for the last, say, 5 years, even probably 8 years, is about 34% a year. However, what we have from time to time, and it's happening right now with 2 or 3 of the metals, is we have scarcity-driven price increases. I'll give you 3 quick examples. When we went into lockdown, when everybody was working from home, terbium went up 500% in 3 years because it's needed in semiconductors. There was a massive surge in demand for home computers and laptops, and now that has since corrected. But at that time, if you held terbium, there wasn't enough to go around. There was literally not enough. Then when we came out of lockdown, hafnium, which is a super alloy in jet engines and rods for nuclear reactors and space rockets, when Boeing and Airbus started to put orders again for jets, that went up 250% in about an 18-month period. So this is what happens. I mean, you can rely on having, you should have, I mean, prices can go up or down and China can manipulate the pricing, but you should have every 3 to 5 years some sort of geopolitical situation or maybe a new technology on the market or some surge in demand that you can benefit from. If it doesn't happen, if there isn't a crisis, you can still enjoy owning an asset that is increasing in demand and is limited and the supply is limited and subject to disruption. The third example I would give you is just in April the 4th, China said they wouldn't export any more of 7 rare earths. One of them has gone up 122% since then, which is just, 3-4 months ago. There's another metal, germanium, which China is also restricted, which we expect next year there will be periods where germanium will not be available at all. Anybody who owns germanium right now is going to see fantastic increases over the next 12 months to 15 months.
Interesting. It's a completely different world out there, but it makes sense because there's got to be a market for that. And the assumption is that everyone that plays in the market is an institutional investor. It's only at the commodity markets and the stock markets and then, or the big, commodity markets traded or so. But that there's an ability for the average individual to actually own some of that is very, very interesting. And it's the reason was very intriguing. It's why we actually brought you on the podcast here. So now, is there a scenario that you can see that possible that would make this market collapse? Like be it in new technology that all of a sudden doesn't need that stuff anymore, or a geopolitical easing that all of a sudden leads to all of this coming together? What are kind of like the risk? What's the downside? What's kind of a worst case scenario if somebody goes down that route? I mean, I'm very intrigued, but I was like almost like trying to see like, well, it sounds like everything has shut up since April 4th when Trump put all his tariffs and things in there and the retaliation from it. But it means, are we buying at the top right now, or where do you see that?
Sure. Yeah, there's pros and cons, and you pretty much named the number one possibility, which is there could be, like, you can only swipe your phone because of indium, right? Somebody might come up with a better technology to swipe the phone, so the demand for indium could go down. So yeah, there could be what we call substitution, and that would decrease demand for certain. Luckily, though, and when we educate people a bit further on them with our brochure and stuff, you can see that they all have multiple applications, so it's not going to be too bad, you know. But what you could see as well, like China can, you know, literally as an unrivaled position. And I'll give you an example, something that just happened this year in America as well, which is um, the US and Europe needs to wean its dependence off China. So they're encouraging and offering billions of dollars in subsidies for, you know, alternative supply and domestic supply. One example would be MP Materials in California. The US Department of Defense just became the largest shareholder in the only rare earth producer in America. Now, it's a little bit dangerous as well. The reason they've done it, though, is they have become a majority shareholder, they have an offtake agreement, and they've given them a guaranteed price, a price floor, and they're offering double the price of where the market is already. So in a way, the US has, the government has become the largest shareholder, the largest customer with a guaranteed price. That's the only thing they can do, because what China could do, if somebody, you know, if you wanted to, you know, mine and process rare earths, we're talking billions of dollars in investment, right? China can easily just manipulate the price, so it's not worthwhile for any of the private business to go into that. So it's very tricky, but it looks like what the US and the West is going to do is pay more, be willing to pay more, regardless of what the price is in China. So it's a dangerous time, but it's not going to be solved between now and, let's say, 2040. It's going to take time. China, for example, has, I think, 39 universities graduating degrees in metallurgy, which is the process of sort of remetallizing. The US, Europe, we have probably, you know, I'd say China might have 400,000 people working in rare earths. The US might have 400. So it's a long way to go, a long way to go. And again, they're critically needed now and will be for the next, well, I can't see any reason why demand will drop off.
Yeah, not only that, I agree, because also we're in the beginnings of the AI revolution right now anyway. And what the AI does is it needs massive computing power. And while there is word about fusion and about what's it called, the other, not fusion, that's on the energy side, but there's like quantum computing, which allows you to do exponential computing with less of a with much less computing power. There's still going to be a while until this is reached, and in the meantime, that the need for computing power is exponentially growing with all these data centers and all these GPTs that are being created, and more analytics and companies taking on more and more agents, online agents. There's estimates there's going to be over a billion AI agents going to be helping to do work on that. There's estimates are going to be a billion or even 10 billion robots going to out there, like the humanoid robots doing things out there are totally robots. And all of these are computer driven. All of these need to be plugged into a battery. All of these need to recharge in some shape or form, and all of them have to have intelligence in them. So until this has reached a certain level, the need for all these metals should be going up exponentially, or at least if not exponentially, but then very, very rapidly to fulfill that need. Do you see that the same way?
Exactly, 100%. I mean, AI and automation and robotics is the next big driver. But also, you know, since 2020, for example, Jack, in 2020, it was all about energy transition. We're going to go electric. It's going to be electric cars. It's going to be wind, solar. We've barely just begun that. The infrastructure is not in place, but that will continue, right? Since then, now we have AI and automation, robotics. That's a huge driver. What also has just occurred really in the last 18 months is defense. The Europe is about to, between now and 2030, will spend, you know, billions and billions and billions on, you know, Europe will, you know, they've never spent as much money. There's two wars going on.
Germany has, I think Germany has a budget, a government budget of $1 trillion, and for the first time ever, they allocated $100 billion, which in the U.S. sounds like nothing, but in Germany, that's 10% of their overall
Yeah,
government budget to arming up, to basically to starting to take on the role that Trump wanted them to take on for a long time, of like of the EU paying their fair share
yeah,
of the defense of the world, which they hadn't. Everyone relied on the US to do it. So the US
exactly.
is not going to slow down, but Europe is now stepping up more. So yeah, there's lots more investment in that happening. Yeah.
Yeah, and actually, so anything you name it, if you look at any growing industry or where we're heading over the next 5 to 10 years, and rare earths will be the raw materials that are needed. I mean, again, that's why they're literally, I don't know why, but this year they have been in the news more than they have been in the last 10 years, practically in a daily. Trump talked about critical raw materials in Ukraine. I think he's mixed, I think he's mixed up a little bit critical raw materials with critical rare earths because we don't know if there are rare earths in Ukraine. Greenland, he talked about, yeah, there probably are, but Greenland is ice. I mean, what sort of investment would be needed in there? Billions and billions and billions. But as I said, there's rare earths in North America, in South America, but it's the expense is it economically viable to go in there, and are they concentrated enough to make it worthwhile? In a lot of cases, no. There's a massive deposit in Germany which has never been touched because it's just not economically viable.
Well, prices, how much do you think prices have continued to rise for some of these places to be economically viable?
It's a very good question. I mean, as I said, the U.S. Department of Defense has just guaranteed the only rare earth mine in America an offtake agreement where they'll pay double the price at the moment. So if there are other producers in the U.S. and Europe, if we think, well, how much cost of like in comparison to China, how much the labor will cost more, it'll be done more sustainably. So I'd say probably we're looking at least a 50% increase, maybe double the price, just to mine them sustainably in more developed countries.
Okay, that's not that far off. I mean, it would be one thing to say like prices have to go up fivefold before it's feasible to do this, but if they're only 50 to 100% off, it seems like it's going that direction anyway. And so, and plus with the need, the government might be willing to continue to overpay and get to those prices in order for the strategic goal of independence of China for those things. So it seems like but then again, it takes time to actually get into those mines, particularly if they're not used anymore, to
Yeah.
actually build this in place.
Well, you make a good point there, Jack. And one of the reasons is geologists call these rare earths trace metals, and manufacturers call them the spice metals, which is a very good metaphor because you think of adding a bit of spice into food, right? So they're only, there's only small volumes, maybe 90 to 100 tons available a year, but they're also like indium in a smartphone might represent 0.01% of the overall makeup. So they're also in very small concentrations in the application. They're critical, they're irreplaceable, they're unsubstitutable, but they're very small doses. So what happens is when, like I said, with terbium went up 500% in 3 years. So whether it's Apple or Samsung or whoever, if one of these raw materials doubles in price tomorrow, they will just absorb the cost because it's far more catastrophic for the production of the iPhone to shut down than it is for them to pay 100% increase on a raw material that represents such a small makeup of the overall product.
Yeah, I like the things like you pepper, like if the cost of pepper for your household goes up fivefold, you can still buy pepper and you still use it because you're only using a couple of
Exactly.
sprinkles of it on your food, and
Yeah.
so if a box of pepper instead of costing $10 now costs $50, it still lasts you 2 years, and the incremental cost is now it doesn't make much difference to the overall product. But if you
Exactly.
invested in pepper and the price went up by fivefold, you have a fivefold in return on your investment on pepper.
That's
It's
exactly
just,
it.
yeah,
You
that
nailed it.
makes total sense. Yeah, makes total
That's
sense.
it.
Very cool. I like this. Now, Interesting. So how do you, if somebody says like, okay, I want to do this and I want to buy 100 pounds of germanium, I'm just picking a number right now.
Sure.
How do people know that it actually exists? Do they have it like in a lockbox for them? Do you have it like on a pile for them? How do you actually know as
Yeah.
an investor that what you're buying is actually being stored for you?
Okay. So the first step obviously would be due diligence. And look, we invite every client. You're very welcome to come to Frankfurt. I meet them there and go to the office and go to the vault and see all that. But most people can't do that, at least not right away. So due diligence, we open up the books to qualified people. We have to get to know people a bit, but we give them then a password to the due diligence portal. And what they'll find is that Tradium is my German partner, are in business since 1999. They've an ISO QM certificate consistently held since 2003. They can look at the books, the turnover. They can even see who they supply. The vault itself. In fact, if somebody was to pick up, I don't know if it's, I think last week's edition of The Economist. The Economist visited the vault in July, and I can give you a direct quote. Actually, I'll find it as I talk from The Economist. They were in the vault, and what they said was, because again, the rare earths are in the narrative, right? They said, we visited a refurbished bunker from the Second World War at a confidential location in Frankfurt. It gives a sense of how precious rare earths have become and how vulnerable the West remains to shortages. The bunker holds 300 tons of minerals amid brutalist chic security. The walls are 2 meters thick. The doorway is 4.6 tons. For some rare earth elements, the bunker holds 10% of the world's annual output. In one corner, an Asian manufacturer maintains a stash worth nearly 10 million. Another firm from Europe stores enough here to cover 2 years worth of use. So these are the things people will find out. They have to do their due diligence. We'll open the books. But yeah, there's over 300 tons of inventory, and we wouldn't make an offer to an investor if it wasn't already in the inventory.
Right. I see. All right. So it's actually physically there. It's basically accounted for. You basically said like, hey, I own virtually. And I'm familiar with people, like a friend of mine has created something like that, completely different, but something like that for gold. He's a big gold bug, and he believes gold will go to the moon. And so he basically says like he holds gold offshore for people in a vault, and he buys it directly from the mines,
Yeah,
in basically like bullion form, and just stores it in there, and you can go visit that location potentially or so if you're a good customer, I
sure.
guess. And it's in a way it's not dissimilar, just that it's
It,
gold and you guys have different asset class, that it's like somewhat secretly stored, really secure. But you can have your if you say that you own $1 million or $100,000, I don't know what your minimum is, worth of rare earth. It is actually sitting there somewhere. It just, instead of sitting in your backyard and can be stolen or be destroyed by something which makes no sense, or gold in your safe, which is again might be safe, might not be safe. You have a centralized location, because when you sell it, you guys can actually release it to the open market and actually sell it again out there and realize the gains.
Yeah, exactly. Look, it sounds like we're doing exactly what your friend is doing with gold. And by the way, maybe you should introduce him to us, because he might be interested in becoming a partner with us and offering our offer to some of his clients as well. A lot of people now are looking to, diversify further. And basically, when you own these rare earths, Jack, you basically own the raw materials that Tesla need, Apple need, all manufacturers need them. So you own the raw materials that are the upstream raw materials that ultimately will become trillions of dollars in downstream GDP. I mean, that's a fact. But you touched on something there as well, which is the storage. Yes, we obviously recommend highly you store with us. Why? Because when you're stored, you own them. You've got your certificate of ownership, your safekeeping receipt. But if you move them, you've moved them out of the supply chain, and technically it'll be very hard to sell them. So it would be a disaster. If somebody doesn't want to store with us, we probably don't want them as a client because it
Yeah,
will just not be a good idea. Another reason is when you have them in our facility, you have access to our more than 4,000 clients in 74 different countries when you want to sell. Whereas if you move them out, who are you going to sell them to? You can't just call Apple up and say, I have 100 kilos of gallium. I've had them
that's
in
the
my
big difference.
backyard. Yeah,
Yeah, that's the big difference between like a precious metal like gold, silver. You can go down to the local gold store and sell it. You can go down to the local
exactly.
pawn shop. You can go, there's online stores where I've bought a little bit of gold that you can literally go on there online and submit a quote, and then you FedEx them or UPS it back to them, and they'll give you the money for it. So there's an open marketplace for gold and silver. There's a very small marketplace for these kind of things, and you guys are obviously at the front of that marketplace with all the existing relationships. So it only makes sense to actually store it with you. I mean, what else would make sense? I don't want to have a bunch of dusty stuffed earth in my house anyway. So that wouldn't make any sense. No, fascinating. Like fascinating that this even exists, that this is even open for the public. So perhaps you could share with us how people would get a hold of them, a hold of you if they're interested in that, and also if there's any kind of investment requirements. Is that regulated from a point of view that it's only for accredited investors? Can some people that are not accredited also get in there? How does that look like, and how can people get a hold of you, find out more?
Okay, so they could just go to our website, strategicmetalsinvest.com. They can download a brochure and stuff there, or they can email me, Louis, Louis, at strategicmetalsinvest.com. And if they mention Jack Bosch, we'll be very happy to take care of them. And the minimum investment is only $10,000, and all are welcome. It's completely all inclusive and not exclusive at all. So everybody's welcome.
Are there storage fees to keep the thing stored there?
Yes, there is 1% a year.
Of the value of the purchase price or of the market value?
Of the market value.
Of the market value. Okay.
Yeah, as they increase, that could go up as well.
Yeah. Okay. All right. That's good to know. But again, if the market value goes up 10x, yes, your fees go up 10x, but the market value went up 10x too.
Exactly.
And it's still now you basically, if you, let's say you've been invested $100,000, now it's worth $1 million. Instead of paying 1,000, you pay 10,000, but 10,000 off $1 million. That's a really pretty good deal in that end. So very cool. Minimum 10,000. Strategicmetalsinvest.com. And if you want to email us, Louis, Louis at strategicmetalsinvest.com. Obviously, we're going to put it all into the show note. Great, fantastic. So, anything else you want to share with our audience before we wrap this up?
No, I think you covered it all, Jack. I think literally we really did. Yeah, thank you.
Well, all right, guys. And with that said, interesting here. I'll do a little wrap up here. Interesting that these kind of investments exist. I always tell people like the rich make money because they're curious. The way to create wealth is by actually keep an open mind, do your property due diligence, do your vetting. Like this is not endorsement of Strategic Metals Invest. I have no investment with them. We were introduced through a mutual person that knows us, and I thought like, it's a great subject to bring into the podcast. But you guys got to do your own due diligence, as I will. But I'm fascinated by the fact that this exists, and it makes perfect sense that if there's an international crisis over rare earths, everyone needs it. We're an explosion of demand on it, that these prices go up. What I didn't know is that there's an ability for the average person with a $10,000 minimum to actually get into that. So interesting. I definitely will check it out. Again, I'm not endorsing it. I'm just saying I will check it out. And you could do the same thing. And more than anything, one more way to potentially make above average returns in there. You obviously need to make your own investment decisions. This is not investment advice. With that said, thank you very much, Louis, for being on the show with us.
Thank you, Jack.
All right. With that said, thank you very much, everyone. That is a wrap. As always, give us that 5-star review, share it with your friends, particularly this strategy, this episode, which really talks about some really interesting, completely alternative investment methods. All right. Thank you. Bye-bye.